Question 1. Which of the following statements regarding the Securities Investor Protection Corporation, SIPC, is true? A. SIPC protects customers against market losses in their investment accounts. B. SIPC is a government agency that guarantees investment returns for all securities. C. SIPC protects customer accounts up to $500,000, of which no more than $250,000 may be for cash. D. SIPC is funded by the U.S. Treasury and overseen by the Federal Reserve. Answer: C. SIPC protects customer accounts up to $500,000, of which no more than $250,000 may be for cash. The Securities Investor Protection Corporation, SIPC, provides protection to customers of broker-dealers in the event the firm fails, meaning it goes bankrupt and cannot return customers' securities and cash. SIPC protects each separate customer account for up to $500,000 in securities and cash, with a cash limit of $250,000, but it does not protect against market fluctuations or investment losses. Think of SIPC as an insurance policy for your brokerage account holdings, ensuring you get your assets back if your broker-dealer goes out of business, not if your investments decline in value. Question 2. An investor is interested in a security that represents an undivided interest in a fixed portfolio of municipal bonds. The portfolio is supervised, but not actively managed, and units are redeemable at net asset value. This describes A. Mutual fund. B. Closed-end fund. C. Exchange-traded fund, ETF. D. Unit investment trust, UIT. Answer: D. Unit investment trust, UIT. A unit investment trust, UIT, is characterized by a fixed portfolio, meaning its investments are generally not actively traded or managed, and its units are redeemable directly with the trust at net asset value, NAV. Unlike mutual funds, UITs issue a fixed number of shares, units, and typically terminate on a specified date or once all the underlying securities have matured. This structure makes UITs a suitable option for investors seeking a predictable income stream from a static portfolio, like municipal bonds, without active management fees. Question 3. Under FINRA rules, all of the following communications must be approved by a principal prior to use, except A. Retail communications. B. Correspondence. C. Institutional communications. D. Public appearances scripts. Answer: B. Correspondence. Under FINRA rules, correspondence, which is defined as any written or electronic communication distributed to one or more existing retail customers and fewer than 25 prospective retail customers within a 30 calendar day period, requires review by a principal, but not necessarily prior approval. In contrast, retail communications and public appearances must generally be approved by a principal before use, and institutional communications must be reviewed. It's crucial to understand the different levels of principal oversight for various types of communications. Question 4. An investor places a stop order to sell 100 shares of XYZ stock at $50. If the stock's last trade was $52, which of the following statements is true? A. The order will be executed immediately at $50. B. The order will be triggered if the stock trades at or below $50. C. The order will become a market order when the stock trades at or above $50. D. The order will be placed on the exchange and executed as a limit order at $50. Answer: B. The order will be triggered if the stock trades at or below $50. A stop order to sell becomes a market order once the stock's price trades at or through the specified stop price. In this scenario, the stop price is $50. Therefore, if XYZ stock drops to $50 or lower, the stop order is triggered and converts into a market order, which will then be executed promptly at the best available price. Remember that a stop order's purpose is to limit losses on a long position or protect a profit, acting as a trigger point rather than a guaranteed execution price. Question 5. The federal legislation that requires financial institutions to report suspicious activities, including potential money laundering, is the A. Securities Act of 1933. B. Securities Exchange Act of 1934. C. Bank Secrecy Act. D. Sarbanes-Oxley Act. Answer: C. Bank Secrecy Act. The Bank Secrecy Act, BSA, is the primary anti-money laundering, AML, law in the United States, requiring financial institutions to assist U.S. government agencies in detecting and preventing money laundering. It mandates the filing of currency transaction reports, CTRs, for cash transactions over $10,000 and suspicious activity reports, SARs, for transactions that raise suspicions of illegal activity, regardless of the amount. Understanding the BSA's role is critical for anyone in the securities industry, as it forms the bedrock of anti-money laundering compliance. Question 6. A registered representative receives an unsolicited order from a customer to purchase a highly speculative penny stock. The representative believes the investment is unsuitable for the customer but executes the order as instructed. Which of the following is true? A. The representative violated FINRA rules by executing an unsuitable trade. B. The representative acted appropriately by executing the unsolicited order. C. The firm must get a signed waiver from the customer acknowledging the unsuitability. D. The representative should have declined the order and closed the customer's account. Answer: B. The representative acted appropriately by executing the unsolicited order. If a customer places an unsolicited order, meaning they initiated the trade without any recommendation from the representative is generally permitted to execute the order even if they believe it is unsuitable. The key is that the firm and representative must clearly record that the order was unsolicited. While a representative should still advise the customer of their concerns about suitability, they are not obligated to refuse an unsolicited order, as doing so would contradict the customer's directive. Question 7. An investor sells 100 shares of XYZ stock short. To execute this transaction, the investor must: A. Own the shares in their account. B. Borrow the shares through their broker-dealer. C. Pay for the shares in full on settlement date. D. Provide a written guarantee that they will deliver the shares. Answer: B. Borrow the shares through their broker-dealer. When an investor sells stock short, they are selling shares they do not own, with the expectation that the stock's price will decline, allowing them to buy the shares back at a lower price later and profit from the difference. To facilitate this, the investor must borrow the shares, typically from their broker-dealer, who in turn obtains them from other customers' margin accounts or other sources. This borrowing is crucial for the short sale to settle, as shares must be delivered to the buyer. Question 8. All of the following are characteristics of preferred stock except: A. Payments are typically fixed. B. It has priority over common stock in dividend payments and liquidation. C. It carries voting rights. D. It can be cumulative or non-cumulative. Answer: C. It carries voting rights. Preferred stock generally does not carry voting rights, which is a key distinction from common stock. Preferred shareholders typically receive fixed dividend payments and have a higher claim on a company's assets and earnings than common shareholders in the event of liquidation. While common stockholders have the right to vote on corporate matters, preferred stock prioritizes income and asset claims over corporate control. Question 9. In the event of a customer dispute alleging a violation of FINRA rules, the initial step for a registered representative would typically be to: A. Immediately contact an attorney. B. Attempt to resolve the issue directly with the customer. C. Notify their supervisor or compliance department. D. File a formal complaint with FINRA. Answer: C. Notify their supervisor or compliance department. When a registered representative becomes aware of a customer complaint or dispute, their immediate and mandatory first step is to notify their supervisor or the firm's compliance department. Firms have established procedures for handling complaints, which often include investigation, documentation, and communication with the customer in accordance with regulatory requirements. Attempting to handle the issue independently or directly with the customer could lead to further complications or violations of firm policy and FINRA rules. Question 10. Which of the following describes the role of a transfer agent? A. Processes orders to buy and sell securities on an exchange. B. Facilitates the exchange of funds and securities in a transaction. C. Issues and cancels certificates and processes investor mailings. D. Provides investment advice for a fee. Answer: C. Issues and cancels certificates and processes investor mailings. A transfer agent is responsible for maintaining records of stock and bond owners, issuing and canceling certificates, or electronic book entry records, to reflect ownership changes, and handling mailings to investors such as proxies and financial reports. They essentially manage the official shareholder records for a company. This function ensures that the company accurately tracks who owns its securities. Question 11. An investor purchased a callable bond. This means the issuer has the right to A. Redeem the bond before its maturity date. B. Require the investor to convert the bond into common stock. C. Increase the bond's interest rate. D. Extend the bond's maturity date. Answer: A. Redeem the bond before its maturity date. A callable bond includes a provision that allows the issuer to redeem, or to call, the bond back from the bondholders before its stated maturity date. This feature is typically exercised when interest rates fall, allowing the issuer to refinance their debt at a lower cost. From an investor's perspective, callable bonds carry reinvestment risk, as their bond might be called away just when they could otherwise be earning a higher interest rate in a declining rate environment. Question 12. Under MSRB rules, which of the following is considered a control relationship with respect to municipal securities? A. A municipal bond underwriter also serves as a financial advisor to the same issuer. B. A broker-dealer owns a controlling interest in a bank that underwrites municipal bonds. C. An associated person of a broker-dealer is an elected official for the municipality issuing the bonds. D. A broker-dealer is a market maker for a municipal bond that it also holds in its inventory. Answer: C. An associated person of a broker-dealer is an elected official for the municipality issuing the bonds. A control relationship exists when a broker-dealer, or an associated person of a broker-dealer, has a position of influence over an issuer of municipal securities. If an associated person is an elected official for the municipality, they are in a position to influence the issuance of the bonds. This creates a potential conflict of interest that must be disclosed to customers before any transactions in those bonds. The MSRB focuses heavily on avoiding conflicts of interest in the municipal bond market. Question 13. Which of the following is a key characteristic of a general obligation, GO, bond? A. They are backed by specific revenue-generating projects. B. They are issued by corporations for general corporate purposes. C. They are backed by the full faith and credit of the issuing municipality. D. They are tax-exempt at the federal, state, and local levels for all investors. Answer: C. They are backed by the full faith and credit of the issuing municipality. General obligation, GO, bonds are municipal bonds backed by the full faith and credit of the issuing municipality, meaning they are supported by the issuer's power to tax its citizens. This distinguishes them from revenue bonds, which are backed by the revenues from a specific project. Because of their broad backing, GO bonds are generally considered less risky than revenue bonds, as repayment relies on the municipality's overall taxing authority. Question 14. A broker-dealer must verify the identity of any new customer opening an account. This requirement is mandated by the A. Securities Act of 1933. B. Patriot Act. C. FINRA Rule 2090, Know Your Customer. D. Securities Exchange Act of 1934. Answer: B. Patriot Act. The Patriot Act, enacted after the September 11 attacks, significantly enhanced measures to combat terrorism financing and money laundering. A key provision requires financial institutions, including broker-dealers, to implement customer identification programs, SIPs, to verify the identity of new customers. This is distinct from FINRA's Know Your Customer Rule, Rule 2090, which focuses on understanding customer suitability for investments, while the Patriot Act specifically addresses identity verification for anti-money laundering purposes. Question 15. An investor holding a stock certificate wants to sell their shares. The initial step is to A. Contact the transfer agent directly to sell the shares. B. Endorse the certificate and mail it to the buyer. C. Deliver the endorsed certificate to their broker-dealer. D. Register the certificate with the SEC before selling. Answer: C. Deliver the endorsed certificate to their broker-dealer. If an investor holds a physical stock certificate and wishes to sell the shares, they must endorse the certificate, sign the back, and then deliver it to their broker-dealer. The broker-dealer will then process the sale on behalf of the customer, ensuring proper transfer of ownership and settlement. This process ensures that the sale is executed through regulated channels and that the ownership transfer is handled correctly. Question 16. The primary purpose of a syndicate in a new municipal bond issue is to A. Act as a financial advisor to the issuer. B. Distribute the bonds to investors. C. Provide a secondary market for the bonds. D. Guarantee the bonds' ratings. Answer: B. Distribute the bonds to investors. In a new municipal bond issue, a syndicate is a group of broker-dealers formed to underwrite and distribute the new securities to investors. The syndicate collectively assumes the financial risk of selling the entire issue and is responsible for marketing and selling the bonds to institutional and retail clients. Their primary goal is to ensure the successful sale of the bonds to the public. Question 17. Which of the following is most sensitive to changes in interest rates? A. Short-term bonds. B. Common stocks. C. Long-term bonds. D. Preferred stocks. Answer: C. Long-term bonds. Long-term bonds are generally the most sensitive to changes in interest rates. This is because their fixed interest payments are spread out over a longer period, making the present value of those future payments more susceptible to shifts in prevailing interest rates. When interest rates rise, the value of existing bonds with lower fixed rates falls more significantly for long-term bonds compared to short-term bonds, as there's a longer period for the disparity to affect their value. Question 18. A customer wants to open an account that will be managed by a third party with discretionary authority. What must be obtained before the first trade can be executed? A. A signed power of attorney from the customer. B. Oral authorization from the customer. C. Approval from the SEC. D. A guarantee from the third-party manager. Answer: A. A signed power of attorney from the customer. For a third party to have discretionary authority over a customer's account, meaning they can make investment decisions, like what security to buy, sell, how much, or when, without needing the customer's prior approval for each trade, the customer must grant them written authorization. This is typically done through a signed power of attorney, which formally grants discretionary trading authority to the third party. Without this written authorization, any discretionary trading is prohibited. Question 19. An investor wishes to maintain purchasing power in an inflationary environment. Which of the following investments would generally be most appropriate? A. Long-term, fixed-rate bonds. B. Preferred stock. C. Common stock. D. Money market instruments. Answer: C. Common stock. Common stock is generally considered the most appropriate investment for maintaining purchasing power in an inflationary environment. While inflation erodes the value of fixed income investments, Common stocks represent ownership in companies that can potentially increase their earnings and dividends as prices and costs rise, allowing their value to keep pace with or even exceed inflation. Think of owning a business that can raise its prices as the cost of living goes up. Question 20. Which of the following statements regarding a qualified retirement plan is true? A. Contributions are always tax-deductible. B. Earnings grow tax-free. C. Distributions are always tax-free. D. It does not require IRS approval. Answer: B. Earnings grow tax-free. A key benefit of qualified retirement plans, such as 401(k)s and traditional IRAs, is that earnings on investments within the plan grow tax-deferred. This means that taxes on investment gains and income are postponed until the funds are withdrawn during retirement. This tax-deferred growth allows investments to compound more efficiently over time, significantly boosting the potential retirement savings. Question 21. Which type of investment risk is concerned with the possibility that an issuer will be unable to make interest payments or repay the principal amount of a bond? A. Market risk. B. Interest rate risk. C. Liquidity risk. D. Credit risk. Answer: D. Credit risk. Credit risk, also known as default risk, is the risk that an issuer of a bond or other debt instrument will be unable to make its promised interest payments or repay the principal amount when due. This risk is a primary concern for bond investors, as it directly impacts the likelihood of receiving expected returns. Higher credit risk typically translates to higher yields to compensate investors for the increased potential for default. Question 22. A customer complaint, as defined by FINRA, must be: A. Resolved immediately by the registered representative. B. Forwarded to the customer's attorney. C. Documented and escalated to a principal. D. Kept on file for 1 year. Answer: C. Documented and escalated to a principal. Under FINRA rules, any written, or electronic, communication from a customer alleging a grievance involving the activities of the member firm or its associated persons is considered a customer complaint. Upon receipt, it must be promptly documented and escalated to a qualified principal for review and resolution. Firms are required to maintain a complaint file and take appropriate action, ensuring proper oversight and customer protection. Question 23. What is the primary role of the Securities and Exchange Commission, SEC? A. To ensure the solvency of broker-dealers. B. To protect investors and maintain fair, orderly, and efficient markets. C. To regulate the issuance of municipal securities. D. To set interest rates for securities trading. Answer: B. To protect investors and maintain fair, orderly, and efficient markets. The Securities and Exchange Commission, SEC, is the primary federal regulator responsible for protecting investors, maintaining fair, orderly, and efficient markets, and facilitating capital formation. It enforces federal securities laws, oversees stock exchanges, broker-dealers, investment advisors, and mutual funds. Think of the SEC as the federal watchdog for the securities industry, ensuring transparency and accountability for the benefit of all investors. Question 24. An individual who provides investment advice for a fee, but does not execute transactions, is typically defined as A. Broker-dealer. B. Investment advisor. C. Issuer. D. Transfer agent. Answer: B. Investment advisor. An investment advisor, IA, is generally defined as any person who, for compensation, engages in the business of advising others as to the value of securities or the advisability of investing in, purchasing, or selling securities. Crucially, unlike broker-dealers, investment advisors do not typically execute trades, they provide advice. If they also execute trades, they may need to be registered as both an investment advisor and a broker-dealer. Question 25. Which of the following is considered a primary market transaction? A. An investor selling shares of IBM stock to another investor on the NYSE. B. A company issuing new shares of its stock to the public through an initial public offering, IPO. C. A mutual fund redeeming shares directly from an investor. D. A market maker buying shares from a customer for its inventory. Answer: B. A company issuing new shares of its stock to the public through an initial public offering, IPO. A primary market transaction involves the sale of new securities by an issuer to investors, with the proceeds going to the issuer. An initial public offering, IPO, is a classic example of a primary market transaction, where a company sells its stock to the public for the very first time. In contrast, transactions between investors in existing securities occur in the secondary market.